So, growing up, my mom essentially emphasized on the fact that you live just once and you should do what you love doing. Investing and running a business, I would have done that even if I didn't get paid for it. It is something that I would love doing in the morning. If I didn't have this to do, then I wouldn't know what I would do. And to add to it, it changes people's lives. So at the end of it, it's not just the money for the people to spend. It is also the number of lives that you've changed. And that's what we try getting the company to emphasize on. So the objective or the vision is that really, you could say, to be one of those 5 people who've changed somebody's life. Once you study all that stuff and you start your life, you have approximately another 60 years to live. And the objective with your wealth is to maximize your wealth over a 60-year period. Not 1 year, not 2 years, not 3 years, but over a 60-year period. So you use the right instrument for the right purpose. Equities by default are a long-term instrument. We use the bonds for the short term. So each instrument, whether it's equity or bonds or real estate, we use it thinking what is the most efficient way it's built. So, you don't use a truck when you're trying to race a car. Culture at Guardian Capital has to do with 2 things: absolute competence and absolute care. Right? The objective is not to maximize the amount of money that you get from a client. The objective is to make sure you make a substantial difference in the client's life. The money will come automatically. What we are really trying to figure out is what are the 2 or 3 things that the person worries about. And then the objective is to make sure those worries are taken away. We solve those problems and make sure the person has a much more comfortable life. I had a strong background in research. And when my mom was retiring, I was talking to a bunch of wealth managers. So there was no one out there with competence in understanding research, understanding the instruments that they were selling, and also putting those plans together saying, look, this is what you can pull out every month. And with regards to the research, I always felt that, I had competence. And this was a good place to get into because people needed this. And I didn't meet anybody out there. I didn't meet a company out there that once had the competence and 2 also had the will to help out in all these other things that she was worried about. And you live just once, so I said, okay, let's try this and start off and move to Hyderabad. What happens is when a person comes in, within the first 2 years, about 80% of their wealth gets transferred into Guardian. So decision making is done based on keeping in mind that all that person's wealth is over there. How would you do it if it was your own wealth? The knowledge that every decision that you make, another person's life is on the line, another person's quality of life is on the line. And that's what drives a lot of the decision making over here. All clients' money is in the same instruments. We don't diversify between, person A and person B. We sort of run it the way we would want our own money run, our parents' money run, and we do the same thing for clients. So every decision is very well thought through, and as a result, it's worked out very, very well. The entire, the decision making on what to invest in and how to invest is really influenced by the books we read of people and investment styles that really suit us. For Guardian, Warren Buffett's sort of investment style runs through the company. It's very fundamental driven. If we buy the entire company over and the markets close down, would we make money? We focus on the fundamentals of the company or the fundamentals of the product. So if it's a mutual fund, we look at every single company within the fund. If it's loans, then we look at what the risk versus the reward is. And if it's real estate, then we look at the yields. But just sticking to the fundamentals and making sure we don't deviate from that, even if a market might agree or disagree at that point. We make sure that we are very, very disciplined in sticking to the core principles. It has to be logical. We don't really look at risk as volatility. We look at it as the probability of you not getting your money back 5 years from now. So what volatility is, prices go up, prices go down. And ideally, we want that volatility, like a Diwali discount, to buy what we want to buy cheaper. So if I buy a company today, volatility will tell me less about 5 years down the line will I make money. Or the earnings of the company and the growth of those earnings will tell me more about, and what I pay for it will tell me more about what will I make 5 years down the line. The risk is actually not volatility. And not getting your money back in the future is the risk. We've really filled the company with people who have a strong foundation, normally chartered accountants, CFAs, CAs, IAs, MBAs who are focused on finance, normally making sure that the fundamentals are very, very good. Then we build on the markets and all that other stuff. But I think the focus on just making sure that the people over here understand finance more than sales has worked very, very well in trying to make the right decisions and also getting the right sort of data back to us to try and see that, what is actually going on. It's very important to first have a very clear perspective of where do you want to go. Otherwise, news can be any news. Everything will affect you. Something in a day, something in 2 days, something in 5 days. So it's important to also have a clear roadmap. I'm here today. 30 years later, I want to get there. Now, whatever news that is coming here, is it going to affect that? Is it not going to affect that in the next 30 years? Which is why we keep educating the clients. Because if you don't have a framework of thinking and a framework of understanding what is going to affect you, everything will affect you. And then you will start making wrong choices. In fact, the more choices you make, the more decisions you make, the lower the odds of you doing well in the future when it comes to this game of investing. Wealth managers have a lot of lingo and none of it makes any sense, right? Most things in life are quite basic. You can either buy a piece of a company, which is equities, you can give a loan, I can give you a loan, which is debt, or I can buy a piece of a land and an apartment and I can rent it out. Basically, those are the only three investment choices you have. You do have speculative choices, and the difference between an investment choice and a speculative choice is a speculative choice is I will buy something like a piece of gold. If I don't sell it, I'm not going to make any money. So now I have to find someone who will buy it at a higher price. And that's quite risky for me. But whenever someone comes to you saying that, hey, buy this or that, and it sounds complicated like this, you need to sit down, think about it, write it down on paper that, look, I have only three choices. One is land, two is I'll give a loan, three is I'll buy a piece of a company. So then the question is, whatever that instrument is that's being offered to you, which one of the three is it? And just by breaking down your thought process, breaking it down to simpler components will hopefully help you make better choices and actually understand what is being given to you. When you're investing, you need to understand upfront that day is going to come. Your portfolio is going to correct by 30% at some point in time, maybe even 50%, right? And that's if you're doing all the right things, it will correct. The question isn't, will my portfolio correct? Question is, when will it correct? We know that is going to happen at some point, and normally it's going to happen a little later. When that happens, we need to make the right decisions. So from day one, when the client comes, we start educating them on what to expect. And it's important in those times when they correct 40-50% that we make use of it as opposed to run away, because that really helps compound the money, like what happened in Corona. It's like the Diwali discount. The market is like another person. Some days it's excited, some days it's depressed, some days it's right, most days it's wrong. Now, we don't want to go ahead in that entire journey with the market feeling the same way, one day happy, one day sad. It's not very healthy. We want to look at the market from a third perspective, saying that, okay, when the thing is depressed, we will come in and we will pick the things that we want. And when it is very excited, we will be very, very careful. And if something is like, something we buy, we don't think we are going to make that much money in the next 10 years as much as we're going to get by selling it now, we sell. But normally you will have to be contrarian to what the market is doing to make sure you buy the best quality of what you can get at the cheapest possible price. Out of say 100 traders, I think about 95 of them lose money, and very, very few of them even beat an FD rate. So then it's getting into like a territory of why play a game that you anyway have the odds against you. It's like going to a casino. In all likelihood, that casino is going to be there 10 years later and I won. So just pick the games where the odds are in your favor, where you are the casino and you can win. What is the purpose of investing? Because in my lifetime when I work, whatever money I make is not enough for the sort of life that I want to live before I die. That is the only rational reason why I should be investing. So, therefore, if that is the goal, then the objective should be based on the goals that you have in life. Otherwise, it's just paper. The reason most people want that money is for the things that they want to do in life. Oh, I want a Mercedes Benz. Oh, I want to see the world. I want to have my coffee in the morning without thinking about can I afford things in life. So it is always important to set a goal, to understand what your roadmap is, what are you trying to achieve, and that will also incentivize the person to save today for those goals that they have. Otherwise, there is no direction. So the decision making, every instrument that we pick is centralized. And it's centralized in a team that from morning to night is only doing research. They're not meeting clients. They really don't care whether the firm makes more commissions or less commissions at anything. It is pure research driven. Just the competitive spirit of picking products that make sure that there is a lot of safety, and also the competitive spirit of picking things that no one else is, to be better than anybody else out there. And that culture, along with the sort of processes and checks and balances that we've put within the organization, helps us outperform anybody I've seen out there. The client, sometimes you have to disagree with them on their own future. Sometimes you have to, pick instruments where you're not going to make any money off of it. So it's much easier to be successful at making that difference in a client's life if your sole objective is to make sure that the client gets to live the quality of life that they envisioned with the little bit of money that they had saved for themselves. I've never met anybody who's rich and knows that they're rich almost. In the sense they might say it, but everybody feels like, oh my God, is this enough? Is this enough? I've seen people who have less money and are more secure because their spending is a lot less. And I've seen people who are very, very well off and are not secured yet because their spending and the quality of the life that they live generally are quite high. Right? It's very relative to the sort of things that you want to do in life. And for a lot of people also who don't understand numbers, finances, so then the education becomes very, very important. Because for some people, the compounding isn't about the quality of life and the goals that I have. The compounding is really about making sure that I can relax in my head and not worry about this one thing called money. Those are the problems that we solve for people. So it's more than just managing the wealth. It is managing everything to make sure that whatever little that they have the highest possible quality of life and live the life that they wanted to before it's done. If you look at the best research, best fund managers on the planet, and you read enough about them, they are not smarter than other people out there. They don't have a proprietary framework that gives them some sort of edge over other people out there. The best trait that they would have is not IQ, but is really clarity of thought. So the ability to see like hundreds of data points and figuring out the one or two things that are the most relevant to us, that is what we train within the organization. And that is what I think we are very, very good at. First difference between, I think, our firm and any other firm out there is all our eggs are in one basket. We are not diversifying a client away from our risk. Our risk is the client's risk. So the client doesn't do well and goes bust, the company goes bust. So we understand what is on the line. There is no firm that does that today. Everybody has different portfolios, everybody is diversified. Some will do well, some will do badly, but the firm will survive. That is not what we are doing. We're doing it, making sure that the decisions are fewer, but we are very, very sure of the decisions when we make them. So then the quality of the decisions are much higher. I think that's a factor that's driven our success, and that's an important factor to think of when you're making investments. For such a small team, we have 2 business transformation analysts. The client has someone reaching out to them who's not managing the portfolio every 6 months, asking them, are they happy with what we do? The focus of the company is really hugely based on client centricity. Every process that we put within the company, we go client backwards. One of the predominant rating systems for our employees at Guardian is client satisfaction. Are they happy with what you're doing? Do they feel that you're making a difference in their life? Does it look like before they die and you're done, that they feel that Out of the 5 people in their life, Guardian was one of them that helped them the most. So that obsession with making sure that you make a substantial difference in a person's life is what drives the company.
Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.